Hey there, Ed McCormack here, founder of the crypto education platform, Dchained. Today's video, I'm going to share one of my favorite crypto projects over the last 6 months, and one that I think is going to explode when it releases its public launch on August 20th. And if you're asking what we're talking about, look no further than Woo Network. And I'm going to talk all about it right now. So before we go any further, I'm going to put out that obligatory disclaimer that Woo Network is something I own. As I said at the onset of this video, it's one of my favorite projects. I'd be silly not to own it. And it's one that I'm going to own for the foreseeable future. But in the spirit of full transparency, I want you to know that I'm not telling you something that I'm simply looking to sell right away, or something that I'm hoping will spur demand so that I can get in on it. I've been invested in this for quite some time, and ultimately, this is something that I wanted to share with you, hoping that it might lead to some really strong results, just like it's done for me. So, without any further ado, let's talk about Woo Network. And before we dive into what Woo Network is, I want you to just think of a scenario. And what you think about, have you ever traded on Coinbase or Gemini or any of the other centralized exchanges and had a hard time finding a certain cryptocurrency? Maybe it wasn't available for you to buy and trade? Well, if you answered yes, you're not the only one. And it's a big problem that exists in the overall crypto community. And it's one that can be solved pretty easily with a very simple yet integrated solution by none other than Woo Network. So let's talk about what Woo Network is. Woo Network is a platform that is geared for institutional investors, meaning those big banks, hedge funds, venture capitalists, private equity firms, as a way to trade similar to how they trade in the equities world, with enough capital and liquidity so that they can do all of their transactions. And this is a product that is not released by some unknown people in the crypto world. This is a platform that's released by one of the largest crypto trading firms, a high frequency trading organization called Kronos Research, a firm that does roughly $5 to $15 billion in daily transactions. So we're talking about a big player launching a platform to service their peers. Now, you might ask, why do they need to do that? Well, the fact is, if you think back to our example, many of these institutions have grown accustomed for decades to being able to go to Wall Street and say, I want to buy 1,000 shares of Apple, 1,000,000 shares of Apple. And there is someone, usually another financial institution, on the other side of that trade, willing to buy or sell at any time of day, based on different price points that evolve as demand goes up and down. And those people in the traditional equities world are called market makers. They will offer up a bid price and an ask price. Here's what I'm willing to buy your shares for, and this is what I'm asking for if you want to buy it from me. And this model works on one that's called an order book. And it's the model that most centralized exchanges operate on, including Coinbase and Gemini. So when you decide you want to buy Ether or you want to sell Bitcoin, Coinbase will act as that market maker. They will either buy or sell depending on where you are in the trade, and then always provide that liquidity for that token. The challenge, though, is that when it comes to the crypto world, there's a lot more than a few dozen tokens and cryptocurrencies. In fact, on any given day, there could be a dozen viable investments that are being launched by new and emerging companies. And that becomes a real big problem for centralized exchanges because they need to be able to have enough capital to fill that order. either the buy or sell. And that's just not possible if you don't have enough volume on the other side. So on Coinbase, I'm going to buy 1,000 shares of Tether. I need to make sure that there's going to be demand on the other side so that I'm not just sitting here now holding only a single asset, that there's trading volume happening for that specific cryptocurrency. And that's really difficult for these smaller to mid-sized large cap. I'm talking tokens that are worth $1 billion. It's really hard to have that volume based on the size of those tokens. There just simply isn't enough. And this is a big problem that is really holding back a lot of financial institutions from diving headfirst into this world, because the alternative, this is how the DeFi world runs, is creating these automated market maker systems where inevitably other investors like you and I will put up our assets in a trading pair, let's say ETH and Tether, and put it up in a pool on Uniswap or Balancer or SushiSwap, whatever it is, and inevitably provide our assets to help fuel trading on that platform. But the problem is that model is inherently broken. And the way that it works and the way that it's manipulated is that many high-frequency traders and bots out there, these programs that are created, are not only able to identify trades with that liquidity pool, because you have to remember that it's not being overseen by Uniswap. It's a self-governing pool that just lives on these platforms. So what they're able to do is different manipulative practices like front running, where they see that your trade has been submitted, and just before it's added to the blockchain, they come in at a slightly higher gas fee and get in on the trade just before you, and then leave you paying 1% to 2% more, which is called slippage. And it's a big problem, and it's something I'm sure you have seen if you've ever traded on Uniswap or SushiSwap. So the solution is very simple. What if you could create a platform that not only had its own liquidity pool, so that it's incentivizing people to provide their tokens and stake their tokens on their platform, and we'll talk about that in a moment, but could ultimately play this barrier, this liaison between the traditional world and the DeFi world, and allow at any given time a trader working at Goldman Sachs or Morgan Stanley to make a trade in their own system, and then inherently route that trade to one of the exchanges that they're integrated with to not only facilitate the most beneficial price for Morgan Stanley or Goldman Sachs, but on the flip side, increase the trading volume for those exchanges. And you might ask, well, what does that situation look like? Well, when you take a step back and you look at where all this liquidity lives, over 70% live on 3 exchanges. And you'll notice not one of them is based in the US, which is partially why, if you answered yes to my question about Coinbase and Gemini, you're having that problem. And it's also probably why you're paying a little bit more than you probably should. On the flip side, if you look at where all trading volume happens, it comes from these emerging high growth exchanges like FTX. And this is where you need that middle layer, that mediation, who will say, I'll take your trade, find the best place to put it, and you'll benefit from the best price with limited to no slippage. So you're not paying anything more than you really have to. And for these exchanges, you're going to get a bump in overall trading volume. So what does that mean for you? This means the world for you. I'm going to tell you why. First, let's look at how they make money. Woo Network makes money. Well, they make money by getting rewards and rebates on those exchanges that they facilitate the trade on. And with that money, what they do is they take 50% of it and they buy back their own native token Woo. They buy it back and they burn it, which means that they take it out of circulation. Now, take that combined with a whole new program where they have released different incentivized tiers for retail and institutional investors to stake their Woo on Woo's platform in order to get lower, if not no, trading fees, which is phenomenal, meaning to make a transaction, you're not paying anything compared to, Uniswap at this point, even though it's gone down, could eclipse $100, many times of the day. And that adds up, especially if you're an institution doing a lot of trades. So when you look at the fact that to date, Woo just released their open beta version, meaning that it's still not released to the public. That was released in late June with the goal and the roadmap of launching the full-on main public launch on August 20th. And in this time, over 1/3 of all the circulating Woo that are out there floating around are now staked already. And Woo has burned over 8,000 of its native currency, just under 1% overall. You're looking at a scenario where you can expect significantly higher volumes of daily trading, which to date, and this is early August, so 3 weeks before the official launch, is already above 400 million daily. And this is not public yet. Once that goes public and the real volumes start flowing through Woo, you're going to see some very aggressive buybacks. And on top of that, what's really shrewd about Woo is they're timing to roll out a promotion where if you're a retail investor, you're going to be able to get 0% trading fees for only staking 1,800 Woo. So price right now is roughly 74 cents. So you're looking at roughly, let's call it, $1,100, $1,300, depending on, where the fluctuation is when you watch this. That is dramatically less than what most people will pay in trading fees in a week, if not a month. And this is something that is really strategic on Woo's part, because if you're following the news, you're hearing all of the challenges that Binance, the world's largest cryptocurrency, is facing across the world. Whether it's the US, which has banned Binance from its flagship operations. They do have a US version, but it's somewhat pared down. It's banned in Ontario. It's been kicked out of the UK. Talk is that it's getting kicked out of Japan. It's really under the microscope. And Binance has 13.5 million users on its platform. And if you think about, of those 13.5 million users, all of whom are not getting discounted trading fees, if you were just to look at 1,800 tokens that you have to stake on Woo to get 0% trading, and you looked at the maximum amount of holders that can hold 1,800 tokens based on the current supply that's out there right now, you're looking at roughly 248,000 individuals, which is roughly 2% of Binance's overall user base. So let's review these numbers again for one moment. So at this time, you have roughly over 150 million Woo that is staked out of 400 million circulation. You also have a scenario where Woo has now introduced a new opportunity for investors to come in. They're lowering the bar to get those 0% trading fees by only staking 1,800 tokens. And with 1,800 tokens, the max capacity that you could have is 248,000 individuals. You're talking about a massive, massive demand on a very limited supply. And that does not even take into account all of the buybacks happening from 50% of the revenue coming in every month. So this is, when I talk about one of those tokens that is perfectly situated to explode, mostly because not due to Elon Musk talking on Twitter, not talking because there are influencers who are pumping it, because it solves a real problem and a real challenge in the crypto market. And it's being felt by the biggest organizations coming into the market, the banks. So looking at that and looking how well Woo is positioned, combined with the economics that it has in place to lock up and remove the supply from circulation, this is one where we potentially could see a token going from 74 cents to $10, if not $20 plus in the next 12 months. So this is not financial advice. This is all speculation because I don't have a crystal ball and I don't know your situation economically. But this is one that I have seen many, many times in the past when a blockchain-based organization comes in with a real commercial value and solves a real problem. Generally, the money flows big time to it. And I wouldn't be surprised to see that in this scenario. So I hope you found this video helpful. If you did, please like this video and subscribe to this channel. And of course, tell your friends. We're always looking to grow the Dchained community, and we love your support. So until next time, happy and safe investing, and I'll speak with you soon.